prices are definitely not the cheapest, you're going to find somebody. I'm thinking about switching. My accountant was charging me like $375 a year.
When you call Jason, let him know that you saw him on the Gutter Growth podcast. Otherwise, it's $1,000 a minute. All right. Good evening, everyone. Grant Hubbard here again with another Gutter Growth podcast for you. Tonight, I have the pleasure of introducing to you guys, and as you know, it's that season. It's literally coming up immediately. So we brought someone in. I'm here with Jason Plett. He's the CFO of the FlexKeeper, and tonight he's going to talk to us about just like how to take care of your taxes, what to do, what not to do, because there's a lot of stuff that people are saying like on TikTok, Instagram, Facebook, like, oh, you got to do this. And I'm sure you're going to answer some of those questions for us. So, hey, thanks for joining me, Jason.
Yeah, thanks, Grant. I appreciate you having me on. I always get jazzed about talking about taxes. People say I'm a little weird, but to each his own, right?
Yeah, absolutely. So, just tell us a little bit about yourself. So, obviously, you're a tax guy. What were you doing before taxes?
Yeah, so I've had my CPA license since about 2000, so a little over 20 years. I did a lot of work in the real estate industry. I was the VP of several real estate companies. I was the director of accounting for a big real estate company actually in Boca Raton, Florida. And my most recent kind of career, I was the CFO of an IT company out of Lake Park, Florida. So I've been in corporate, and then just recently this year, I stepped out of corporate to enhance my tax business. And that's what I'm doing now.
Awesome. Well, right on time for the tax season here. So what are we looking at? January 4th. How much time do people have? They're going to start getting their W-2s for like the employees, right? Usually around the 17th to the end of the month. And then the owners of the businesses, how much time do they have to start to get this stuff together?
Yeah, so I can't even actually start to physically file taxes until January 23rd. It's a Tuesday, and the IRS doesn't even open their e-filing portal until that time. So for people that get their W-2s early, that's the soonest that you can file. But for business owners, if you're doing the bookkeeping yourself, maybe you've wrapped up your books, you can file at that time too if you want, but generally the IRS doesn't even release corporate forms until well into February. And then the actual S corp, if you have an S corp or an L or a small LLC, as long as it's not a sole owned LLC, the filing deadline for that's going to be March 15th. But if you do have a small LLC that you just own 100%, that's going to end up on your personal return. And as we all know, that filing deadline is April 15th.
Yeah, we know that one, right?
Yep.
So go ahead.
Yeah, the thing that actually trips a lot of people up is that 3/15 filing deadline. They think, oh, well, 4/15 is tax day, so that's when I have to have until to file stuff. But if you have a small S corp, nope, it's a month early. Generally, I file extensions for small businesses anyways, so that I get a little bit more time and we can file all the the returns together on 4/15. But definitely don't miss that 3/15 deadline, even if you're just filing an extension.
Okay, that makes sense. Great information. So, like, you guys need to start getting your stuff together. And when I mean getting your stuff together, if you don't have somebody that's able to look this stuff over for you that you can trust, we now have Jason for you. And we're partnering with him to make sure that if anybody in our Gutter Growth Mastermind, anybody in our Gutter Growth channel, or just anybody that knows us, feel free to reach out to get his information, and we'll put it out here as well. What is the best way to get a hold of you, Jason?
So the best way is usually to send me an email, Jason@theflexkeeper.com. And I know you're going to share this at the end of the podcast. So
we'll put it at the beginning and at the end. Yeah. A lot of people are going to listen to this maybe and not so much watch it. So would you say that one more time?
Yeah, Jason@theflexkeeper.com.
All right.
That's generally the best way. But obviously, our website at www.theflexkeeper.com, we have a link there that you can click that goes to our emails. And then I shared my personal cell phone actually on my slide, and I don't mind texts to that
Okay.
cell phone. It's better to text me than to call me because
Yeah.
I get 1,000 calls and half of them I don't pick up because I'm like, who's this trying to sell me something?
Yeah,
Um,
absolutely.
but yeah, I'm pretty easy to get a hold of.
Jason, let's start off with giving some advice. I know we're going to run through, we have a list of things here that, just a short list of things that I know that you're really good at. Um, for a lot of guys, we're coaching a lot of gentlemen that have just started a business, right? Whether they have a DBA or they have nothing, or they have an S corp or an LLC. Um, do you always recommend having something, right? You don't just want to start a business and have nothing and just try to figure it out 6 months down the road. And I'm just going to ask you some kind of simple questions here that I think,
Yeah, entity formation is actually the biggest hang up or trip up that anybody out there can have. Um,
hmm
if a lot of guys, or if you're to go on Google or ask for people's advice, they're going to tell you, "Oh, go form an LLC."
mm.
To me, having an LLC is great, but it's kind of like driving a Ferrari.
Wow.
It's really, really nice, and you love to show it off. But when the thing breaks down, it can be pretty costly to your bottom line. So,
Wow. Okay.
my preferred entity is always an S corp, and if you really want that LLC kind of designation at the end, you can
hmm
form an LLC. That's no big deal, but just get the forms to file an election to be taxed as an S corp. And here's the reason why. If you're an LLC and you're the sole owner of it, the IRS doesn't even recognize that as an entity. It's considered a disregarded entity. And basically, having an LLC gives you a measure of liability protection, but the taxation is terrible. And what I mean by that is that when you have an LLC, all of the profits of your business is going to flow through your personal tax return, and it's going to be subject to Social Security and Medicare taxes. And
Oh, yeah.
those are about 7.65%. But as the employer of an LLC, you also have to do the company match portion of it. So your tax bill ends up at 15.6%. And that's not even talking about your federal tax bill that you're going to get.
Right.
So a lot of my first time clients, they come in with their brand spanking new LLC and they're happy and excited. They made a lot of money. And they're hoping that they don't have to give the government too much money. And then they get this, 15.6% tax bill right on top of whatever they made. Plus they get a tax bill on that as well. So they end up with a
Okay.
huge surprise. And they look at me like, what did I do wrong? I didn't think that I would owe that much money.
Yeah.
And basically I say, well, because of how you set up your entity, you're exposing your profits to that. Now, of course, when you form an S corp or you elect to have S corp taxation, there is some drawbacks or some cons against that. Generally the IRS recommends that you take a fair and reasonable salary out of that S corp. So you do have to kind of set up payroll, so it can be just a little bit more hassle than the LLC structure, which is why people love the LLC because it's so easy to run. There's never any problems. But the thing about it
But you're
is that
paying for it essentially, right? Because you're
right.
paying that extra tax.
Yeah, you're paying that's a good point. That's exactly what it is almost. It's almost like a convenience fee for
hmm
having such a easy structure that you're in. Of course, if you believe that if you really want to contribute to Social Security and Medicare and that's your retirement plan and you feel like the government is really in it for you and that whenever you retire, you're going to be able to take that money and it's going to take care of you, then by all means, form the LLC. Don't worry about it. you'll be good. But, generally my clients don't have so much trust in that as their retirement plan, when they're ready to retire.
Makes sense.
So, and listen, if you're a serial entrepreneur, my suggestion is always have an S corp holdings company, and then you can form 10 LLCs. Only hold them own them with your S corp, and then your S corp will then flow to your personal tax return. So this is kind of like a real estate model, something that I learned in real estate, that real estate entrepreneurs do a lot. They have some type of holdings company that owns their LLC, that owns their LLC, that owns the property. That's a very popular structure. So like if you have a gutter business, and then maybe you have another business, you're fixing cars, or maybe you're doing handyman services and you're running that under a different business, form a couple LLCs and then an S corp, and own those LLCs with the S corp, and you'll save yourself the headache of that taxation of the LLCs.
That makes a lot of sense. So with that, talk to us a little bit about adding your children. I think we could dive straight into that. Like, TikTok, or everybody's given this crazy. Obviously, there's always has to be like a backstory to everything, right? But so people are like, add your kids to your payroll, right? Or what specifically are they talking about?
Yeah, so this is like one of my favorite kind of myths about saving taxes. And it's perfect. It segues perfectly from the LLC ownership. So like I have clients all the time that are like, yeah, I was on TikTok or Instagram or whatever, and I saw this perfect tax advice. Like I should add my kids to payroll because they can make up to $12,000 and not pay federal tax on it. Well,
that's what it is.
Yeah. So that's great. But the minute that you add your kids to payroll, you have to pay their Social Security and Medicare, and you have to pay the match. So immediately you're adding 15.6% tax to that 12,000 that you're going to pay them. And so where this makes sense is if you're crushing it, let's say that you're making 300,000, you're in a 32% tax bracket. Yes, this is a nice savings. Add your children, you can shelter 12,000. And again, it's a math game. You're looking at 15.6% Social Security and Medicare, or paying tax at your 32% tax bracket. Okay, you've got some nice savings. But if you're in a 22 or 24% tax bracket, your effective rate of taxes, you're probably paying 19-20% tax on your money. So you're going to save 3, 2, 3, 4% on that $12,000. I mean, you and I can do the math. It's not worth adding them to payroll and going through the whole
there's
hassle.
a lot of there's a lot of hassle, and hassle means money typically, right? And then you've got to do more payroll, which is time, and then you've got to pay your CPA, your tax guy, whoever, a little bit more to file taxes for that,
Yeah, it's great.
I think that makes sense if you're making 3, 4, 5, doing $1 million a year.
Yeah,
and you
absolutely.
want to set them up for success down the road, I don't even know how that looks. Does that help them when they go to maybe buy their first house when they're, let's say, 22, and they're like, oh, you've been working since you were 9?
No, generally it doesn't. I mean, generally the mortgage company is. Yeah, the mortgage company looks at 2 years of past history. They don't go back to, if you were earning 12,000 in your dad's gutter business, 10 years ago. They don't really care about that. But I get all these crazy things where people come to me and they're like, oh, I saw this on TikTok. And my first question is generally the guy that was on TikTok, is he a CPA of some kind? And usually I get no. And I'm like, well, did he stay at a Holiday Inn Express last night? I mean, at least he's got to check some box to give you this tax advice, right?
Yeah. And typically, would you agree that, again, there might be a little truth in some of this advice, but just a little truth, and you really need to get with a certified professional to find out like if any of these myths like could benefit you, and again, like how much time and effort is gonna, what's the percentage that's actually going to be left if it is true?
Yeah, no, I mean, again, it really, really depends on your individual tax situation, and the higher the tax bracket that you're in, the more sense like those types of things make.
Yeah.
But again, if you're doing, if you're netting 100,000 at the end of the year, probably not the most effective tax strategy. Now,
Okay.
there is a tax strategy that's out there that that's become semi-popular in recent years, and that is there's a tax strategy called the Augusta rule.
Okay.
So this is named after our all our favorite residents in Augusta, Georgia, who all leave their house for a week and a half when the Masters tournament comes into
Yeah.
town, and they get $2,000 a night for renting their house.
Do they really?
I don't know. I'm just throwing
It's
a number
okay.
out there. I'm
But has
I'm a
something like
CPA.
this.
I'm allowed to just make up numbers,
Yeah,
right?
yeah. I love it. I need to get on board immediately. Okay.
Yeah, but
Okay, that makes sense. Yeah.
so they were complaining to the IRS that they were making, 10, 11, $12,000 renting their house for this week and a half, and they were having to pay tax on this. So the IRS actually capitulated to the residents, and they made a nice little tax carve out for this $12,000. So essentially, there's a couple of caveats to this tax strategy, and the first one is obviously you can't have a home-based business, so your business address cannot be your primary residence. So in other words, if you're running a gutter company out of your house, you're not going to qualify for this. But if you have a gutter business and you have a office warehouse someplace where you get your mail, then you can qualify for this. And essentially, you can write yourself a check for up to 14 days of revenue that you're having board meetings at your house, and you don't have to claim this on your taxes. So you can take a $10, $11, $12,000 rent expense on your business and put it in your pocket, and you don't have to claim it on your taxes. So it's called the Augusta rule. And again, if you're gonna be egregious about it and say, yeah, I had board meetings at my house and it cost me $30,000 in rent, you're probably looking at, getting not, kind of you're walking the line there. But if you're if I was to go rent a space for a day someplace to have a board meeting, it might cost me $1,000. And so, the IRS isn't going to look sideways at something like that. That's fair and reasonable.
Let me ask you this along those lines. We're going to talk about one more. I wouldn't say it's a myth. I know there's some truth, but I do get asked this fairly often. And you see it on TikTok. It's probably the same guy, right? He says, put your kids on the payroll. And I don't know that I've heard it called the Augusta. And obviously, I believe you're the professional. They have talked a little bit about that, getting some money back for if you've had to, if you have a couple meetings at your house. But then they're like, go buy $160,000 Range Rover because it weighs over 6,200 pounds the minute you get a business. I mean, the first day you get your S Corp, just go get that Range Rover. Should you go do that? Just and write that bad book? So, I don't want to spend a lot of time on it, but a lot of people talk about this. So
this over $6,000 vehicle is a good tax strategy if
you're
looking
weight 6,000 pounds.
Yeah, 6,000 pounds. It's a good tax strategy, but here's where what they don't tell you. So you go buy the Range Rover. It's $120,000. You get a $60,000 write-off, give or take. And
plus all the interest.
Right, but then what happens is you have a vehicle on the company books, right? So now 4 years from now, you're tired of driving this Range Rover that's costing you, $250 to fill up every time at the pump, right? So now you go sell your Range Rover. Well, guess what? You sold the Range Rover for
$80,
$80,000.
yeah.
Okay. And you depreciated it. You took a 60,000 right off off the top, and then maybe you depreciated another 10 for the next 2 years. So basically, the basis of your Range Rover is now $40,000, right? Follow the math, and
Yeah.
you traded it in for 80. So guess what you have?
You still
You
owe.
well now you got
No,
a
do you
40.
still?
Now
Oh,
you got
yeah,
a
yeah,
forty
okay, yeah.
thousand dollar capital gain.
You got a capital gain, you got to pay more taxes.
Then you got to pay more
Well, that's what I
taxes.
mean. You still owe. Yeah, you still
Yeah.
just gonna owe. Not to mention, can you even afford this vehicle when you just
Well, I
fresh
mean,
open your business? You might
yeah,
look good with no customers. Oh man, guys. So
yeah.
the rule is get with the professional. Jason is who we're recommending. Stay off of TikTok and Instagram for your tax advice. Let's tell them a little bit briefly about the difference between you and just going to H&R Block.
Yeah. So
And not
H&R
to call out
Block.
H&R Block, but just whoever, your tax guy or
Yeah.
company
I
or
mean,
whatever.
listen, I love H&R Block. They're, fine people, but H&R Block, they're like the puppy mill, right?
Mm-hmm.
So you go someplace, you're a number to them, and the way that H&R Block makes money is they just churn out tax returns.
Mm-hmm.
That's what they're, the more tax returns they do, and then of course they're going to sell you a bunch of products aftermarket, right? They're going to sell
Yep.
you $25 audit protection. They're going to sell you, if you want to talk to a tax professional during the year, we're going to charge you a $50 fee. Um,
And they're
I
not going to
mean,
get you the most back, right? They're not going to itemize it as detailed as somebody like you, probably.
well, no, not necessarily. I
Okay.
mean, you can get good H&R Block professionals, and those are the guys that are, that are caring about their customers, and they basically just
Mm-hmm.
bought an H&R Block franchise. And
Yep.
so they're getting the H&R Block marketing arm.
Okay.
So, that's fine. That's a good business model. That's not our business model. Our business model is really, we love to have a personal kind of relationship with our clients
Okay.
and really understand, what are they doing? If they're going to do something, I prefer, and they don't know what the tax implications are of it,
Yeah.
shoot me a text. If you text me April 10th, I'm probably not going to get back to you timely,
Yeah, that's a little
but
late.
but
That's way
no, but
late.
anytime. No, but I'm just saying, like, anytime
Yeah.
I'm a little harder to reach during tax season because obviously
Mm-hmm.
I'm
You're
fielding a
busy.
ton of, but in September, you want to go buy a vehicle. What should I do? You're gonna text me. I'm gonna be like, yeah, that's a good investment, or no, or yeah, this is how you should do it. And
Mm-hmm.
especially if you're my client and I already know your tax situation,
Yeah.
it's a lot easier for me to be like, yeah, that makes sense for where you're at, or no, that doesn't make
Yeah.
sense.
That
And
makes sense.
again, I'm gonna be more expensive than H&R Block.
Of
Listen,
course. Yeah. Yeah.
if you want your tax return done and you don't want to pay a lot for it, like, go to H&R Block. Like, I
Well,
love
how
those
about if they
guys.
just do it themselves on TurboTax, right? And just muck it all up.
Well, yeah, they can do that too. And again, I like, we
There's
laugh
money for
about that, but
everyone. Yeah.
right.
Yeah. Yeah. There's money for everybody.
Exactly. And if you're a small business owner, a small gutter, like, I understand, like, money is tight. Um, and
But so is not
you,
doing your taxes right. You want to think about how tight that money's going to be.
yeah, absolutely. If it
Yeah.
comes down to the fact that you're gonna hire me and you're gonna pay me a couple of $100 more than what you think that you should pay, like, I genuinely try and make it worth it for all my clients.
Mm-hmm.
Um, and again, if you go out and bid a job and maybe you're a little bit more expensive than the next guy, like, why should, cheap isn't always the best,
You get what you pay
like,
for, and we're
it,
definitely
it,
the most expensive.
yeah. So I'm definitely not the most expensive because, I have a small business.
Mm-hmm.
Um, and my overhead is relatively low, but I also am very accessible.
Yeah.
I've never had a client complain like, oh, I haven't, I've called you 14 times and never got a hold of you. And I get that a lot. It's kind of
For sure.
interesting. I get new clients every year that are like, yeah, I tried calling my accountant and emailing him and this and that, and he never gets back to me.
Yeah.
Um,
Yeah.
and I mean, listen, there's a lot of work out there. As
Hmm.
accountants during tax season, we're really, really busy, but I would never want any of my clients to be like, um, yeah, I tried to call Jason and he never got back to me. That would be
Right.
like number one on my list of things. Like, I would rather if a client um wanted to go someplace else, that they were like, yeah, Jason was way too expensive, so I went
Yeah.
someplace else.
Yeah.
Like,
That makes sense.
fine, I'm not for everybody, and
Yeah.
my prices are definitely not the cheapest. You're going to find somebody. I mean, I even had a client, a potential client that I called yesterday, and he had an LLC business, hadn't done his tax return for a few years, and he's like, I'm thinking about switching. My accountant was charging me like 375 a year, and I'm like,
Mm,
you should go to that guy,
you should.
because I'm not 375.
No, definitely not for the whole year. Yeah. That's all
Yeah,
I
so
meant too when I said we're definitely not the most expensive gutter company, but I just mean you get what you pay for. We absolutely
right.
know our worth, and the well above average gutter companies, we're definitely a more expensive company, but you get what you pay for. People understand value. More and more people are understanding, like, um, do you want the wish.com CPA, or do you want the real deal CPA? You know what I mean? It's like you can get a polo on Wish, or you can go to Macy's. Most people are starting to find out like why Macy's charges what they do, because
Right. No, exactly.
the large and the medium on the back is for like people that live here in this country.
Right. Right.
Talk.
Is Wish still a thing? Or is it
You know
Timo now?
what? It's Timu, and I'm not gonna lie. I'd like to try everything a little bit, I mean, especially I have 6 kids.
Right.
So you get some kids, they're all like in the styrofoamy Yeezy style slides and stuff, and I'm not spending $300-400. And you can get these things on Timu for like $6 a piece. I got a pair. But and I tried Wish, and I think there's Sheen. That stuff's all hit or miss. And then why not? We need to spend the money here in the United States, but we gotta understand in the United States, like we can't charge $700 for slides either. Let's make them
No, I agree
affordable.
with
But
you. Yep.
so yeah, I think it's Timu is conquered, but they're all gonna have their Rome. They'll all have their Rome moment, right?
Right. Right.
Jason, so let's talk to them. You've got to know a lot more about QuickBooks than I do, because I don't know anything. I'm a gutter guy. I
Yeah.
Talk to me about QuickBooks. Like, it's a must.
Yeah.
When to do it, and like like tell me some about like the nightmares or something. Let's start off with QuickBooks setup.
Yeah. So QuickBooks, unfortunately, is a necessary evil at
Mm-hmm.
some point. Okay.
Okay.
So I don't recommend QuickBooks, jumping right into QuickBooks when you first start out.
Okay.
QuickBooks actually, it's funny because we have a guy that, an accountant on staff with us, that really prefers to do kind of systems design. So
Okay.
I actually worked with him and created this cloud-based kind of accounting organizer,
Okay.
and we were calling it Flexi Light, and we were selling it for $100, $100 a year. And essentially, you logged into our website, you put in all your receipts. It was kind of like Excel based. You put in all your
Okay.
receipts. It kind of summarized everything, rolled it up, and I could pull your information from the software and do your tax return with it. Well, I think QuickBooks must have been like had like a spy at my desk or something like that.
They probably
Um,
do.
because like 2 months ago, they released something very, very similar, and they're charging like $10,
Uh,
um, $10 a month for this product, um, which is exactly where I would recommend like every, if you have guys that have questions about it, I don't remember the exact product, but it's basically $10 a month, which is perfect. It just allows you to organize your stuff and get it to your CPA.
Okay.
Where there becomes real big problems is when guys are like, okay, let's go to QuickBooks. I have enough income where I should be doing, have it more robust. I should be invoicing clients out of QuickBooks, doing all this stuff out of QuickBooks. And they're like, okay, I'm a gutter guy. I don't know anything about QuickBooks, but my wife is sitting at home doing nothing, raising the kids. So she should probably learn how to do QuickBooks and help me run my company. So they recruit their wife, and nothing against anybody's wives. My wife is very much more skilled at QuickBooks than I am, but they essentially recruit their wife. Okay, so the wife starts doing the QuickBooks. They don't really know what they're doing. They're kind of learning on the fly. And then they go to their accountants, or me in this case, and they're like, okay, here I have this QuickBooks Online. It's really, really cool. And then I start looking at it, and, they got bank accounts named. I have actually an automotive company that I'm working with now, and he has a bank account named Parts Expense.
Okay.
So every time he buys a part, he posts it to this bank account. So he's got like this $300,000 bank account. It's called Parts.
Yeah.
And which is, which is relatively easy fix. But these are the kinds of things that I see, when people are running their QuickBooks themselves and they don't really know, like, is this an asset? Is it an expense? Is it equity? Is it a liability? Like, these are all accounting things that QuickBooks expects, like, the regular, guy to understand when he's setting up accounts. But it ends up everywhere. So sometimes it's just better, like, if you're big enough, if you're doing, over $100,000 of business, don't recruit your wife to run your finances unless she went to school to do this. Go find, at the FlexKeeper, we offer bookkeeping services that are relatively inexpensive, but even engage a bookkeeping firm to review what you're doing quarterly. If you really want your wife to do it and learn how to do QuickBooks, like, at least have somebody that knows debits and credits kind of review their work and review her work, and whatever. And I don't want to be sexist either. Maybe
no, you're fine. Listen, I always take a bite out of the I always take a bite out of the sandwich my wife makes too, just to make sure that it was tasting good and prepared properly.
Right, but maybe the wife's running the gutter company, and she tells a husband, like, "Hey, you need to do my books." Like, I'm not mean. I don't want to be gender specific, right?
No, listen, what's funny is, and I think will be well received, my sandwich comment is way worse than your comment, is that the gutter guys and gutter gals, we have a good sense of humor. We're a close-knit. I like to think that we're pretty close-knit in our industry. I have so much respect for the guys and gals that are doing exactly what you're talking about, because they're just trying to figure it out, right? We both can respect trying to keep some money in the family. Inflation is insane right now. Things are crazy. The tax rates, like, you got to make a lot of money. The numbers. If you have a single child or more, you got to make insane amounts of money. So no, that's going to be, we have fun in the gutter business. We work hard and then we play hard. So it'll be just fine.
Yeah. Awesome.
Yeah,
for sure. But yeah, I mean, QuickBooks is one of those things.
Tell me about a nightmare with the QuickBooks, like, of that happening, or is that kind of what it is? Is that the nightmare? Having the husband or the wife or the daughter or the son or whoever it is, the uncle living in the shed. He's like, I'll do your taxes for this. Is that what becomes the nightmare?
That's really the major nightmare is that when you have people that aren't accountants and they don't know what a debit or a credit is, and what is what does a normal looking balance of an account look like. That's really the nightmare. That's what we see a lot of. But we've had people I've even had a new client this year that came, and they actually had two businesses and they were trying to run it out of the same QuickBooks. So they had basically two businesses in their QuickBooks, and then they also, not only did they have the two business bank accounts attached to the QuickBooks, they had their personal account attached, their 16 credit cards attached. And everything else, because they were just thinking like, oh, let's just, QuickBooks has a really nice bank feed transaction, kind of a bank feed situation where they'll take, instead of you entering stuff like you used to have to do, you can attach your bank account to QuickBooks and just feed it in, and then you just accept everything into QuickBooks. And so what happens is that they decide, oh, I've got a Home Depot card, I've got these 16 credit cards, and I'll just attach everything, and then it'll be perfect. And, and it ends up where you have to, us as professionals, will come in and be like, there's a big unwinding thing. And then the other thing QuickBooks does, another nightmare, you're spurring my memory talking about bank transactions, is that you start feeding bank transactions, and then QuickBooks has this really nice feature that says, okay, well, this is Chevron, and you categorized it as auto expense. Do you want this to be a rule? And so, so people are like, well, I don't want to look at every Chevron transaction, so this is great. So yes, and it becomes a rule. So then they have 300 rules for everything, and this happens a lot. So they set up a rule where they get a deposit. Okay. So the deposit, all right, the rule is if I get a deposit, I'm going to categorize that as revenue. Okay. So then they have all their deposits get categorized to revenue. And then what happens is they're also invoicing out of QuickBooks. So when they invoice out of QuickBooks, that's also going to revenue. So now instead of saying if you had $300,000 of invoices that are going to revenue, your revenue in QuickBooks is actually showing 600,000, because you've not only had your invoice going to revenue, but you set up this rule that your deposits also go to revenue. And then what's even
there's
worse,
people listening to this right now, shrinking in their minivans or whatever, going, damn it, I do that.
Right. And so all of a sudden you're looking and, oh, my income, you take it to your accountant, and your accountant's like, did you make $300,000 last year? And they're like, no, I didn't make 300. Well, your top line says you made that's not right. And I actually had this happen with a pool company, and he was doing this. And then what happened is I had to go in, he paid me to clean up his QuickBooks. So I went in, I deleted all his deposits out of his, I deleted all his deposits out of his ledger. And then I came back to do his taxes the next day, and all the deposits were back. And I'm like, what I just spent like 2 hours like cleaning up this guy's QuickBooks. And then I realized that he had set this rule. So what happened is when I deleted the transaction, it went back into his bank feed, and then the rule said, okay, put the deposit into income. So I had to, it was like kind of bad, I had to go investigate. Oh, well, you set up this rule, so I had to delete the rule before I did the cleanup. So, that was my bad. And obviously my client, I didn't charge him twice for doing the work. But that was just like one of those things where I was like, yeah, QuickBooks was trying to be helpful and save me time, but they actually cost me more time.
Yeah. Something came to my head as I'm spinning this globe right here that I think would be worth mentioning. A lot of people feel like, well, I want to make sure that I can just run down to my CPA's office and talk with him. What do you say to that? As you're obviously have a viewership right now of North America, that's what you're in a certain state. I know I just told you, off the record where my tax guy is. He's actually in the same city as you are, and I'm obviously in Texas, and you're in Florida. I've been doing that for a decade. I don't need to run down to his office. I know his phone number. Zoomed. Like, I just go with who I trust and who takes care of me really well. What's your 2 cents on that?
Yeah, no, I mean, my 2 cents is along the lines of you, right? I mean, I do have clients all over the US. I have clients in California, clients in, Washington, out west. So, and we're in the CPA profession is not one where we're confined to a state like a lawyer is. Like
Right.
if I'm licensed to practice law in the state of Florida, I can't practice law in, say, New York. But
Mm-hmm.
it's different for us CPAs. We can
Right.
file taxes wherever. And, the only drawback sometimes is that because, I can't even, I don't know everything there is to know about the IRS tax code. I certainly don't know everything there is about certain states tax code. Um, so sometimes, the state returns can be a little tricky because I have to make sure, like how does the state treat certain types of income or but generally I haven't, over my years, I've never
Yeah.
anticipated, had too many problems with state tax returns. And, my best referral source is word of mouth.
Yeah.
And I actually have clients that I have never met face to face that that I have a Zoom call with. They send me an email and say, hey, my father or my friend
Yeah.
recommended you. And then I'm like, and they're like, we need our taxes done. What do you need from us? And I give them a little list. They send it to me. I do their tax return
Get it done.
and they electronically sign the consent for me to file their return, and
Mm-hmm.
we're on our merry way. And I've never met them, and some of them I haven't even had a phone call with, so I don't even know
Right.
what they sound like.
Yeah, absolutely. I want to take a quick second here. Are you interested? Not necessarily the word interested, but do you do taxes for the small guy too, for the employee, or do you really just focus on the employer as a CPA?
Yeah, so I will do taxes for anybody, but again,
Okay.
for the employee that's got a one W-2 or two W-2s, and maybe they have a wife that has a W-2 and a couple of kids, like TurboTax is your best friend.
Yep.
um and it's really really hard to screw up your tax return as long as
Yeah.
you're computer literate. You follow TurboTax's, like, hey, what's the number in box one, and you put that in there. And
What if
I
they
mean,
have what if they have like we talked about it at the beginning, the entity formation, and maybe they've done it wrong. They've got a DBA, an LLC. Maybe they have an LLC, most likely like a DBA or just an EIN number. And let's say they're just running, maybe they paint sheds, right? A couple weekends and they get some checks and like they want you to do Schedule C stuff for them. Is that up your alley? They're like, yeah, I'm just taking massive losses and I just want to get some money back. Is that
yeah, now you're talking about what's more my, kind of my jam is
yeah.
anytime you're getting 1099 income that's not being necessarily reported to the IRS or taxed.
Mm-hmm.
Yeah, that's really the guy that I'm looking for, because that's the guy that I can provide the most benefit to, right? Like
Right.
that guy I can figure out and save him some taxes. The guy that has a W-2 or two
Yeah,
W-2s,
that's
this
yeah.
I
There's not
you
a lot
can,
to do with that.
right. Yeah, and you
Yeah.
can come to me, and I have a flat rate fee that's fairly inexpensive, but again, it's probably behooves you to just go on TurboTax. But I have a lot of buddies that are my friends too, and they're just W-2 employees, and they're like, listen, I don't even want to mess with this. Like
Right.
I don't even have time to, like, my time is so valuable. I don't even want to spend 15 minutes on TurboTax. So like,
Yeah.
you do this and I'll pay you what your rate is. And
Mm-hmm.
I don't care that it took you 2 minutes to do it. At least
Right,
it was
right.
done and done right.
So in the gutter
So
business, there's a lot of 1099 guys. That's why I brought that up. A lot. And a
yeah,
lot of them, have this. whatever they think it is, some type of business, and then they're doing. And I was that way for a lot of my life. I've always had an entrepreneurial spirit. And before I even had my tax guy, I had always had a little DBA or an LLC, and I had no clue what I was supposed to be doing with that. And I do a kitchen or a bathroom remodel, and then I've always worked a W-2 at gutters. Basically, I always had found a way to make an extra $20,000 to $50,000 and have a
Right.
full-time job making around 100. And I didn't know what to do with that stuff. And then, finally I found a tax guy, and he's like, "Yeah, he walked me through it." And that's what
Right.
I liked, and that's what I'm recommending. Is sure, maybe it cost a couple more dollars, but the education that you can get and the guidance that you could get dealing with a guy like Jason over at the FlexKeeper is going to be vastly different than doing him yourself or going to H&R Block. And you guys you go like going to H&R Block, and it's probably because right about now or 3 weeks ago, it's because they gave you a loan on your taxes at a nice rate so you could buy Christmas presents. So stop doing that too.
Yeah, no,
Use
for sure.
Klarna or something. Or just shop on Temu. Use Klarna on Temu. Save yourself a whole lot of money.
That's actually kind of a funny story because
Go ahead.
I actually believe it or not, I last year I picked up 5 tax practices.
Mhm.
And and people are like, "What? You have tax practices that you do their taxes for them?" And I'm like, "Yeah,
That's awesome.
they specialize in individual taxes and like getting those business loans that you're talking about,
Yeah, yeah.
advances on tax return. Like that's
Mhm.
not me. I don't have that business model, but
Yeah.
they have no idea. Like they had no idea how to set up their business entity or even file business taxes because they just do individual taxes all day. So
That's
like
awesome.
my clients are tax return companies that you're talking about right now.
Mhm. Mhm. Let's talk about that proper when you're hiring subs and getting the proper documentation so that you can take care of the tax side correctly. Tell me a little bit about that.
Yeah, so one of the things that we see a lot, and again, a lot of some of our small businesses, and we here in Florida we do a lot of like landscaping
Mhm.
companies. We do have a couple of construction companies that are our clients. And they generally like to hire the guy down at Home Depot that costs $60 a day. I don't think they cost $60 a day anymore, do
Not
they?
anymore. These guys want $360 a day.
Yeah. So I mean, you're gonna take cash and pay those guys, like you probably shouldn't run it through your books.
Right.
Um, because at some point you could get in a lot of trouble doing that. You want to find, and again, I'm aware that legal American, social security number workers are a little bit more expensive than those guys. But you kind of really want to get when you hire a guy, you really want to give him a W-9, which just basically collects his information. And you want to
Mhm.
do that up front. Like the worst time to do that is tax time and be like, "Hey, dude, I need your social security number. I know I
Yeah.
paid you, $20,000 cash under the table for the year, but now I want to take a tax deduction for it. Like, give me your social security number." Like, nope, you're not going to get it. That guy is
What's
never going
that
to give you a
number
social.
for there's we don't want to get too deep in it. We got 7 or 8 million. I'm in Texas, 7 or 8 million illegal immigrants in the country right now. And to those guys, they're not all good. Okay, we know that, and this doesn't need to be a political conversation. But there's a tremendous amount of those gentlemen and women, but mainly gentlemen that work their tails off, right? And they do want a better life, and I think there's a lot of us that understand that. And then there's some of them that are able to get, I know it's not an EI. What's the number? The
It,
E I,
it's an ITIN.
yeah,
It's an
ITIN
ITIN
number.
number.
So you
Yep.
want to at least get that from those guys because that means they're at least working through a system versus
Right.
just hopping the wall and just wanting straight cash. And you can pay those
Exactly.
guys in a check form and 1099 them as long as you're getting that number, correct?
Yeah, no, for sure. And you can still give them cash. I mean,
Well, it depends on
listen,
where the cash is coming from, though, too. Like, because that trail's got to
yeah,
be taken care of, right?
yeah, that's absolutely true. But again, the thing that we find is that as accountants, we file 1099s for a lot of companies at the end of the year, and the worst
Mm-hmm.
nightmare for us is just having that business owner that never followed
Got the
through with
number.
that W-9, and
Mm-hmm.
now they want to 1099 that guy. And I'm not saying that he's illegal or not. Listen,
Yeah. Yeah. Yeah.
again, we can get into the politics of it if we want. Probably not the place for it. But
Nope. Well, you're in
if you,
Florida and I'm in Texas. We know
yeah,
what it is.
yeah, exactly,
Land or sea.
right. But if your goal or your strategy is to get that number at the end of the year when you want to file the tax
It's
return
no
and get a
good.
1099, you're never going to get it. Even from the dude that's your neighbor down the street, and that
Yeah.
he's red-blooded American, he's not giving you
Mm-hmm.
a social.
No, he's gonna just, exactly. He's just gonna find a new job.
Yep. Yep.
Let's talk. Let's wrap it up here with another one of your specialties, which is goal setting for the company. What do you recommend? What do you offer? And give them some ideas. I think we talked about something like, you just going to have this thing for 3 years? Are you planning on having it forever and then passing it down to your children? There's a different way you're going to run those companies, right? Based off of what you actually plan to do with them, long or short term.
Yeah, for sure. So I have a lot of clients that they come to me and they're like, yeah, I'm tired of doing this and I really want to sell this business.
Yeah.
But they don't have a nice clean set of financial statements. They don't they basically, they're basically buying food for their dog and paying for it out of the company. Obviously I'm
Yeah. Yeah.
joking, but
Yeah.
I
But
mean, they're
things
basically
happen.
running
Yeah. You want to just
everything
try to
through the
write
company.
off. They think they can write off everything.
Right. And it's fine. Like, as a tax preparer, if you want to buy food for your dog and say, yeah, that guy was protecting my office, which is in my house, great. I mean, more power to you. I'll file your tax return, if that's the
Yeah.
stance that you want to take. But at the end of the day, if your goal is to run a business and build it for 3 to 5 years, like the guy that comes in to buy your business, he doesn't want all that crap in your financials.
No.
And you're not going to get top dollar for your financials either. Right? It's great
No.
to have all these write-offs, but if the bottom line of your company shows, $10,000 and you really, you paid $100,000 of kind of personal expenses, you're going to get money based on the
Yeah,
$10,000
you're
that's
not going to
showing
end
on
up
your
with any
financials.
money. You're
Right.
treating the company bank account like your personal account. I had that problem 18 years ago when I had my first gutter company. I'd never seen that kind of money before. Holy crap.
Right.
Okay, now I'm making $18,000 a week. Woo, let's go. Hot dog, 23 years
Right.
old.
Right.
That's it.
Yeah, and so what I like to talk about to my small business guys is that if your goal is to have a family type business and you're going to pass it to your kids and you just want to minimize your tax exposure and you want to write everything off, great. That's go for it. I don't have a problem with that. But if your goal
Yeah.
is really like, I'm going to work this business for 5-7 years and then I'm going to sell it, like you want that. And listen, there's personal expenses that are business expenses. But if you come to me and that's your goal, I'm going to be like, okay, we have a special place for those
Yeah.
on your financial statement. So we have a section that shows what the true business operations are. And then we have another section that is legitimate business write-offs that I, as an owner of a small business, can take. But if I was to sell this business, the next guy that came in and bought this business may not write this stuff off. And so that's my, I call it owner's discretionary expenses. And I set up a P&L or your financial statement completely different.
Mm-hmm.
because I want, at the end of the day, if your goal is to build a business and sell it for top dollar, we don't want any of that crap that
You don't want that
you're paying
riffraff,
for.
those riffraff
Right.
receipts in there.
Right.
Your
Exactly.
Botox, the dang Botox in your Wish.
And your Timo
Your Timu Botox
slides.
shots. Yeah, Timu slides. Hey man, I gotta write off these $70 Spurs hats somehow.
There you go. There you go. But
I got a good wife, so very true. I think having a CPA help guide you is very important, right? It's going to be very important.
all right, did we click out the bad weather
Yep,
in Texas?
we're back. We're back. It was a brief one. I was just saying that it's definitely a good idea. So this being a gutter growth podcast, obviously me and Tim and both Johns, we just want to be supportive of the smaller business. Sure, some of the bigger businesses. So like all the things you're talking about, I work for a Brothers Gutters franchise, and the owners are really set up for success through all of that budgeting. They've got that stuff set up. Now, whether they do the right things with it is a different story. But I'm blessed enough to work for a guy, Kip, who was a banker. He was in corporate America. He's got his P's and Q's, his I's, his T's, they're all very well done. I learn a lot from that. But the guys that we're coaching, and not all of them, but they need this advice. If I was running a gutter business, I would need this advice. So I recommend you guys get a hold of Jason and have a conversation with him. Well, you do 15 minutes for $1,000, correct? Over the phone. And
Yeah.
then reach out to Jason and see if he's the right fit for you. But I love what we were just talking about was, what is your vision with your company? I think a lot of this, a lot of actions in life and definitely in business are created behind your vision. So start with your vision. And if you need assistance with your vision, in the gutter industry, we can help you with that. And so can Jason. So can
Yeah,
Jason.
absolutely.
What I'm going to put you on the spot here. So usually I try to not put my guests on the spot, but then I do just randomly at the beginning and the end. So I'm not going to hold you to it, but could maybe we have you on one of our mastermind meetings? We do a Zoom, and you're going to be busy for the next couple months. I know that, but maybe I could hit you up in summer or fall and get you to sit in and do a little Q&A for us. Sometime in the summer when you're not as busy.
Listen, Grant, yeah, absolutely. I'd love to do that. I mean, my wife will tell you that when I first started out, I hated the network. I was like this shy, like, oh, why would anybody like want to hire me to do anything? But then I found out, once I stepped out, kind of saw the business that she's built, like networking is like the fun part of the business. Like I love networking. I love sales. It's like, I don't like doing the work anymore. So I need to find another CPA that likes to do the work, and I can just hang out on podcasts and meet people and joke about, staying at Holiday Inn Express or their Timu slides or whatever.
You know what? It is fun. It's like I haven't been hanging gutters for quite a while, but it is fun doing the podcast for sure, man. So you're out in Boca. I got a lot of friends, as I told you. So I owe you a trip to the Capitol Grill. I don't know if you've
All right.
been.
Yes, I have.
We'll do that, and I'll be in Florida actually, but I'll be in the north. I'll be up north, but we'll get together this year. I'm down in Florida once or twice a year, so me and the wife and you and the wife will get an opportunity. We'll go to the Capitol Grill. You got anything else you want to tell the folks about taxes, tax preparation, and we'll call it business planning?
Yeah, no, I mean, again, my thing is that I might not be everybody's cup of tea. You may have, you may love your CPA. He may be awesome. And I'm not looking to, take anybody's business away. But if if you're struggling to find a good guy that you can, want to connect with, definitely you're going to get my contact information, and I'll be
Mm-hmm.
more than happy to spend a couple of minutes. Not even, I'll book a, 30-minute chat with you and not charge you a dime. And see if I'm the guy that can help you.
When you call Jason, let him know that you saw him on the Gutter Growth podcast. Otherwise, it's $1,000 a minute.
All right. If I could get $1,000 a minute, that would be awesome.
Jason, too much fun. A lot of good laughs, man. I wish you the best in your new year. And thanks for coming on. I learned a couple things. So I'm definitely not putting the kids on the payroll because I was just about to do that on the way back from getting the Range Rover and my preview slides. Grant
All
Hubbard
right.
with Gutter Growth, Jason Plett with the FlexKeeper. Thank you so much. And I appreciate your time.
Thank you, Grant, and Happy New Year to you and the family.